Hello, everybody. Happy Monday to you. Welcome to Monday Night Live, our weekly investor agent class. And we got a subject tonight that a lot of folks have been asking for the last month. So I thought we'd go ahead and schedule it for tonight. So I'm looking forward to that. Let me go ahead and get everybody promoted here. And let's see here. Yep. So last week, actually last week and this week were supposed to be similar subjects. Last week, obviously, I was in Atlanta with 10 members of the team. So that was a lot of fun. Got to have dinner with everyone. So let's get you all promoted here. Deb Warner, good to see you. Jim, good to see you, buddy. Jim Diana. Laura, good to see you. Congratulations on your first deal, by the way. Michael O'Keefe, good to see you, buddy. PF, good to see you up from, actually you and Michael O'Keefe both up from E-Town. Rob Lane, good to see you. Michael Usery, good to see you from, hey Olga, how you doing?
I'm doing well, thank you. Nice seeing you.
Good. Are you down in South Carolina or are both of you up in Virginia?
No, in South Carolina today.
I just drove. So I was in Atlanta Monday, Tuesday, and Wednesday I got up, left early, went down to Sarasota, Florida, but I drove all the way back up yesterday. So I didn't get too close to it, but it was going up 95 to 26 to Columbia, and then from there it's 77 up to Charlotte and all the way up through the hills. But in any case, the Wilson side of the family just had a huge reunion on Sunday near Spartanburg. So you're not too far from there, yeah. Yep. Vanetta, good to see you. Liz, good to see you. Got several Virginians on the call. Speaking of Virginians, we got Susan Murray. Good to see you, Susan. Tom Silvestri, representing New Jersey. Tony Moore. Looks like, Tony, we got you here twice. So I'll go ahead and promote both in case one is like on the phone or something. So, hey, Michael O'Keefe from promoting it, but let me just say allow to talk. That might do the trick there. So in any case, welcome aboard, everyone. It's good to see you. So tonight we're going to talk about some creative purchasing techniques. Hey, Benetta, did you get my text earlier? Like, I know you want to meet Mondays regularly, but still use the scheduling link, because otherwise there's no way to coordinate between all the team members. It's the one central source where we can coordinate all the strategy calls, you know.
So do I have to do it every week, or is there a way to do it so that it's scheduled every week?
Well, I think
because that's what I thought I was doing.
Yeah, schedule
somehow
once,
something didn't work.
Well, I think schedule once only allows you to, it's called schedule once, only allows you to go out 2 weeks in advance. Because normally we don't really have like a regular routine schedule call like that, but I don't mind. It's, you know, whatever, everybody's different, but things could change, you know, as far as what we're doing for marketing and you know, vacation plans and things like that. So we got more people to promote here. Hang on 1 second. Let's go back. Alexandra, good to see you. Anita, good to see you too. California, Florida. Christina Coleman, good to see you. Hey, Christina, I did get your text. Unfortunately, I was had too many, too much stuff and too small a bucket. So just ran out of time. But if you want to, after the meeting, we can chat for a bit.
Okay.
Keela, good to see you. You're very welcome. I think that is everybody. Yep. Hi, Gina.
Hi.
How are you?
I'm really good. How are you?
Good. In any case, so I wanted to say hi to everybody. I don't know if anybody, let's see, if Tom Z, let's see, who all was in Atlanta last week? Well, no, Gina was there. Christina was there. Was anybody online doing the virtual class last week, the NAEA class? You can do a hand raise, or you can just unmute yourself if you want. It seems like there was 1 or 2 people did the virtual class, but I'm not sure who they were. But Christina and Gina, did you guys like the NAEA class Tuesday and Wednesday?
I thought it was amazing. I
Yeah.
really did. And it was, I just got some really good fodder out of it. So we figured out the 3 things I'm going to build into the business, and then I've already started implementing. And I know that I talked with Brianna and Michelle. We're doing the same thing. Brianna's got her 3 things. Michelle can go over what she's going to implement in.
Nice. Yeah. Yeah. I know those guys. When I first joined EXP, the first thing they had me do was speak to the Honey Badger group on, I guess it's like a lunch and learn kind of thing with John Kitchens. So, and Jay Kinner and I had spoken a few times before that and had talks of like just combining efforts one way, shape, or form and doing some joint ventures. So that actually came up also while I was there. So
It was fantastic.
Oh, good. Yeah. Hey, so Christina, you know you got some connections made there too, right? I mean, as well
Oh,
as
absolutely. Oh, yes. I mean, I made connections there. The knowledge that was shared just really helped to propel my business.
good. Yeah. Well, there's
Christina, can I ask, like, what are you going to implement? Like, what's your one main thing you're going to build into your business?
The one main thing that's going to be built into my business from that event is just having a organization that's on a just much more fine-tuned organization. And that's one of the areas that I've been praying for. And so going there and seeing how they do it, and they've already gone through the trials and the tribulations of being of doing real estate well, right? And then the second thing I'm going to implement is some of the reports that they gave us access to that I didn't already know about. So I'm looking forward to that as well. Yeah.
okay. Hey, Bonetta, I just saw your message. Yeah, you said you have a question on doing an off-market list.
Yeah, I went to a networking event last night and I met a investor, and he said what a lot of investors have said is that they don't meet a lot of agents that know how to work with them. And so
Yes.
he's been working with a lady who's an agent in the area, and she just, usually works with buyers and sellers. And I told him, I work with investors. He got it really excited. So we exchanged information. And the first thing he sent me this morning was, add me to your off-market list. So I go, off-market list? Okay. That's one of the things I wanted to talk to you about on our phone call that we never had today that I thought we had scheduled.
Yeah.
So yeah, I need to know ASAP, how do I create one of those so that I can share it with folks?
Well, a little bit of background. In the early days, I did a lot of off-market deals too, because I'm an investor. And that's the kind of stuff that they teach. But the reason they teach it is because, like you said, the very first sentence out of your mouth was, he was frustrated because most agents don't know how to help him. And he was absolutely right. That's why I got my license. And then everything we're doing here, this entire team, the mortgage work company I used to have, the brokerage company, all was because of that very same phenomenon. And that's what this addresses. So the reality is, everybody was taught to do off-market deals as a result. Otherwise, you're stuck on the MLS with everybody else.
Right.
But that's the reason why. So the reality is they think they're doing themselves a favor, but they're really not. So in any case, one of the drawbacks of doing a lot of off-market deals is you get stereotyped as being an off-market person, which can be good in some regards, attracting all the investors who are, hey, I want to get the off-market deals, I'm going to go to Bonetta. But who do you think they're going to go to when they want to sell their property? They're not going to go to you.
They're going to go to a regular agent.
Yep. Because they know if they put on the MLS, 10,000 agents will see it. And probably now 1.8 million agents will see it. And all those investors will see it. And they'll get a lot more looks at their property. So the thing is, when they try to do off market, if you think about it, they're dramatically restricting their opportunities. I mean, it's just like a needle in a haystack. If you think it's tough on the regular business, you should see what it's like in the off market business. Now, having said all that, if you want to appease them to attract them, absolutely go to Really Flow, do your phone calling, and get some owners of properties who want to sell. And you could say, look, I'm going to run it by my internal list first for 24 hours, and then we're going to put on the MLS. You have to disclose all this, okay? And you can do that but I wouldn't do it all the time, and I would only do it under those circumstances. So I would tell your buyers who want the off-market deals, you got 24 hours to make an offer on these off-market deals. So make it really strict, really tight. You create urgency, you create scarcity, and the good investors will move fast, But the reality is if you think about it, the seller, that's a huge disadvantage. I mean, whenever an investor asks me, hey, can you sell my property off market? I don't want to put on the MLS. My first response is, really? Well, how fast do you want to sell it? Well, I want to sell it right away. Okay. Well, if I go and if I don't put it on the MLS and I don't put it on LoopNet and CoStar and Craigslist and everything else, that means I'm limited to my database, which is probably a few thousand people and some Facebook presence, which is extremely limiting. Okay. Now, if I put it on the listing services, tens of thousands, millions of agents will see it as well as their clients. So which is better, a few hundred people seeing your property or a few million people seeing your property? Of course, a few million people. Now, if a few million people see your property, are you more likely to get multiple looks, multiple offers, and perhaps highest and best scenario? Absolutely. Yep. So why on earth would you want to do it off market? And it's all because it's what they've been taught. It doesn't mean it's right. It's just like the old story of the lady who every Easter cuts off the ends of the ham to put them in the oven to bake it. And somebody asked her, why do you cut off the ends of the ham? It was my mom did it.
Yeah, mother did it.
She calls her mom. He says, Mom, why do you cut off the ends of the ham? She says,
right.
Because your grandmother did it. She calls her grandmother. She said, why did you do it, Grandma? She said, because my pan was too small.
Right.
So people don't even question stuff. It's the same thing. Just think about your habits. Chances are when you put your shoes on in the morning, you put the same shoe on, the same right foot first, then second foot, or vice versa. It's just habit. That's all it is. So, but if you can address them with logic, plain, simple, factual logic, a lot of times you can get them to see the light. Now, again, having said all that, Vanetta, I wouldn't get into any battles with them. I would say, okay, sure, I'll put you on my list for off-market deals, right? And go ahead and do that. And then you want to qualify them. You say, so this is things to write down, guys. Number one is they need to be interviewed and qualified before they go on your off-market list. They got to provide proof of funds, what their credit score is. Do they have an available line of credit? All those three things. I always ask, what do you have in savings? Do you have an available line of credit? And do you know what your credit score is? Okay. And then when they satisfy those three things, I'll say, great, now you're on my off-market list. That way, when you go to the sellers, you can say, I've got 27 people who are qualified right now looking for properties just like yours. I've already screened them, I've interviewed them, they've got lines of credit that are available, they've got cash, they've got great credit scores, and they got proof of funds. And that way you can run a pretty good business, but I wouldn't make it the main thing. My old broker used to tell me, said, be careful, you're going to get yourself stereotyped. You want to first and foremost use the listing services, particularly MLS, because everybody's protected by E&O insurance. Okay, when you go through proper channels and use your standard forms and go through brokers and all that. A lot of people doing off-market deals are going to also say, we don't want you going through brokers. Well, you can't do that. That would get you booted out of the business. So the reality is you're far better off following the rules, and they are too. And you can show them that. So in any case, Bened, does that help a little bit?
It helps a little, but the whole point of them wanting to work with us is they don't want to compete with everything that's on the MLS.
Oh, I know.
So
yeah,
they're looking for deals, or they're looking for properties before it gets to the market. But I understand absolutely what you said. That makes sense. It's not fair to the seller to limit the exposure of their property. I mean, that's a no-brainer.
correct.
So I got the bottom line is qualifying, which I intend to, because I'm not wasting my time. I don't do that. No, life's too short. And then two, if from the people that I find that have a property to sell from the cold calling, then I can say, well, hey, here's one. You got 24 hours to make a list. Now, that brings up another issue or challenge that has come up in our MLS is if you do an off-market deal and it's not advertised on the internet for a certain period of time, we can't even show that as, how do you say it? That
You won't get credit for it.
exactly.
Right.
That's an
another
issue.
thing.
That's happened here recently, and a couple of people were really penalized for that. So they're really doing some things here in our market with that MLS. So that's something that raises for me now that you say that.
Well, boards around the country over the years, at least a handful of them I know of, have tried different things to prevent people from doing off-market deals, but they can't do it. Every single time they eventually get shot down because a consumer files a court case. They're saying, you can't make me put my property on the MLS, and they're absolutely right. In fact, if anybody was on a class for members from last summer, the subject came up, I think it was Texas, where they said, you can't do off-market deals. It's against the law now. And I said, I would like to see that. So somebody brought it up in writing. We put it up on the box here in the Zoom. And if you read the fine print, you found out that it really wasn't that wasn't the case. There was a loophole in there just for owners who, if they don't want to do it, you don't have to do it. But you also can't use, like, if you're going to advertise with your MLS number and all that kind of stuff, it has to be on MLS. The only way you can do it off market is if you do not advertise in any way, shape, or form using the board, referencing the board, or anything about the MLS, and then you can do it, including Texas. So that came up the other. Who was at Madupe brought it up last week, saying I couldn't remember the exact verbiage, but in any case, the fact is you definitely can do it. It happens all the time. So in a summation, what I will do here, guys, is, if you want to do that to help attract investors, make sure you make it very special with a sense of urgency and a sense of scarcity. And when you talk to the sellers who you're trying to entice them to list their property, you'll have some that'll say, I hear what you're saying. I just don't want to put on the MLS because I just don't want the publicity. I'm just going through a divorce, whatever the case is. Don't push them. Say, hey, no worries. I actually have a list of ready, willing, able buyers now. I'll put it out to the list. We'll do it for 24 hours. Chances are you get an offer. Great way to get you still get it listed. You're just not going to put it on the MLS. You still get paid a commission. You still run it through brokerage because everybody needs to be covered by E&O insurance. Don't ever do something outside of brokerage without your license. The only way you can do that is if it's your own property, and you still have to disclose it, by the way. You can never do any transaction, even your own, without disclosing that you have a license. Okay. That would get you in trouble every time. But those are the parameters. Keep it small, keep it simple, and keep it really special. And by the way, once you have them in your corral, so to speak, then you can show them any deal. Just because they're on their off-market list doesn't mean you can't show them something that's on Crexy or MLS. You know what I mean? Oh, we got an echo of an echo. So,
Hey, Gary, is everybody promoted?
I'm sorry?
Is everybody promoted?
Yeah, I'm looking now. Just Brianna and a few other people. Ursula. Hi, Ursula. And yeah.
Hey, Gary.
Yes. Hey, Rob.
I got a question regarding getting credit for the sale.
Yeah.
I haven't done this or been a party to it, but I do remember discussion of it when I first got with Keller Williams, that topic came up, and I thought that people had said they were, I don't know if they were listing it on the MLS after it went under contract or how they were doing it, but at least they were getting credit for the sale through the MLS.
Well, I know the brokerage office will still give you credit, but on the MLS, that I'm not familiar with that, Rob. I'm sure it sounds like it happened, but I'm not sure if they've already got under a contract. I know some MLSs, when you first list a property, that it has to be status of active.
Right.
Like
That's what I was going to ask you. Yeah, because
so it could be a loophole somewhere. Yeah.
Here.
It could be a loophole.
That was an issue. It had to be, they were putting it after they had closed it in the MLS, because I had one of my colleagues, I'm also from Keller Williams, and that's how this issue really came up for us recently. And she couldn't get credit because she had put it in and I guess closed it immediately. And they said it had to be on active for maybe 24 hours. I can call her and find out what the details were, but I know that it became an all over conversation throughout Keller Williams for sure about this issue with our MLS. This
Yeah, I
was in the
recall
last
them
few
saying that.
months.
I recall that happening and saying, yeah,
Mhm.
yeah, now that you say that, it had to be up there active for a certain period of time.
Mhm.
And people were still trying to, circumvent the regulation, and it became
Mhm.
a huge finger waving thing of a no, don't do that.
Mhm.
Gary, I've put them on. I've had them where I've had a contract ready to go, but I wouldn't sign the contract. We put it on the MLS, signed the contract, and within an hour took it right back off.
Yeah.
Made it active, then turned around and made it pending.
That
Yeah.
might be your market, but our market is a
Well,
little bit different.
Yeah, that's in Florida, the Orlando and the Daytona market.
Yeah,
And they all are different. Actually, Cindy
Yep.
made that comment. Every
Yep.
MLS can
Yep.
have its own rules inside, as long as the pecking order is federal, state, local. So it's this, remember, there's about 4 different MLS systems out there, but there's 404 versions of those 4 MLS systems. At least that was the way it was 10 years ago. Who's new? There's only there are now. So, hey guys, I want to say a big hi and a big welcome to Rob. Rob Perot's technically joined us several months ago and had to jump through some hoops to be able to be where he is now. So Rob, welcome aboard, brother.
Thank you, sir. Appreciate that.
Yep. And Michael Williams is relatively new from LA and joining us. I think this might be maybe your first class. I'm not sure, Michael, but Michael's out there making waves with Anita. You guys should connect, by the way. So Michael Williams and Anita Davis, you guys are a stone's throw away from each other. Okay.
Hello, how you doing?
Yeah, Inglewood. So
Yep.
yeah. So it's definitely connect with each other and coordinate. Get a lot more done that way.
Oh,
So,
there.
you know what? You two should take over the LA gig, the Global Investor Group. We'll have to talk about that.
Yeah, I'm willing.
Okay. All right. So let's do this, guys. Speaking of investors and off-market deals and things like that, what's interesting is if you remember a couple of months ago, Lou Brown taught a class and he was talking about subject to purchases. One of the things he mentioned, okay? And he was talking about using trust and a bunch of other things. What that really is it's assuming a mortgage. So this falls into the subject for tonight's class, which is creative purchasing techniques. Back in the 80s, that was the last bastion of where most things were assumable. Most mortgages were assumable. Throughout the late 80s and early 90s, a lot of the mortgage companies, and following some FHA guidelines, started making their mortgages non-assumable. But there's exceptions. Exceptions are VA mortgages are still assumable. Okay. You've got to jump through some hoops today. My first property was bought assuming a VA mortgage. And all it was signing a piece of paper. That's all it was. There was no credit check. There was nothing. It was just, here's my driver's license. I really am Gary Wilson. And they're okay. You can take over this mortgage. Nowadays, they're going to check you out and screen you and do all kinds of stuff. So in light of all that happened when the loopholes started closing and the mortgages started becoming not assumable for the most part. Oh, by the way, one quick thing. A lot of variable rate mortgages, okay, adjustable rate mortgages are actually assumable. Always check it. If you have an ARM, adjustable rate mortgage, or the owner of a property has one that you're looking to purchase, make sure you check it out. Ask to see the mortgage and loan documents, and you can see if that adjustable rate mortgage is assumable, okay? Now, moving on, let's say you're looking to buy a property, and in most cases, this would be an off-market deal, this strategy, where you do what's called subject to. What that means is you'll purchase the property subject to the current mortgage. They don't say assumable because you're not assuming the mortgage. What you do is this, all right? You purchase the property inside of a trust, all right? So, and you don't actually put the property in the trust the seller doesn't do that. It's part of the transaction, okay? When the seller sells the property, it transfers into a trust. Does that make sense? You guys follow me? So you're not putting the house in a trust and then purchase the trust, right? You can get the beneficiary rights and the trustee rights and all that. Those are things you can actually you can sell those rights. That's not what we're doing here. What we're doing is the seller is selling the property, directing it into a trust, okay? And the trust is owned by you. You're the trustee, you're the beneficiary. And the other person is the grantor. They grant the asset into the trust. Now, I just said something I want to qualify here. That type of a trust where there's different kinds of trust. There's revocable trust, which means you can change anything you want anytime. And there's irrevocable trust, which means it's literally irrevocable. Once it's set, you can't change it. That's the conventional wisdom. But there are trusts that are irrevocable that you can change the trust. You can be the trustee and the beneficiary, and you can assign the trustee rights to somebody else, and you can assign the beneficiary rights to somebody else. And that's just an aside there, just to clarify things. We'll talk about trust a little bit later here into the class. But what I'm getting at here is just to clarify this whole subject to thing is you sell the property into the trust, and then you're now going to be the beneficiary of the trust. And these types of trusts are ones where you're not the trustee. And I'll give you an example. So this is so interesting. This came up this time. You guys remember Rick and Anna? Yeah, I had them guests on our class back in the wintertime. So Anna and I used to be coaching buddies together years ago, 10, 12, 14 years ago. And then I met her now husband, Rick, several years later when he was chasing her, and they eventually tied a knot. I took him through the beta program for the training. So they now buy properties. They bought, I believe, at least 2, if not 4 properties by using this method. They use a subject to, they buy the property goes into the trust as part of the purchase, right? It's directed into the trust as opposed to them personally. In their situation, they're not the trustees. They name me as a trustee. So they asked me and I agreed to be trustee for a couple of their trusts where they own properties. The reason they do that is this: even if the mortgage and note has in the documentation that is not assumable, there's one exception. An exception is if the property is in a trust. And then any bank that has a loan on the property cannot touch it. They can't go inside the trust and what they call the note due. They can't call the note. They can't make it due and payable due to a sale because the property is now inside of a trust. It's a loophole inside the legislation. Okay. Now, real quick.
Say that one more time. Even
Yeah.
if the mortgage or loan is not assumable.
Yep.
Then what?
When it's inside a trust, when the property is inside of a trust, remember the note is attached to the property via a mortgage document. Okay. So what happens is that makes that note inaccessible to the lender who loaned the money.
So the due on sale clause doesn't
Yeah.
apply. Is that what you're saying?
Correct. The due on sale clause is rendered useless because of the fact that the property is inside of a trust now.
Is the trust actually the purchaser, or is the purchaser the person with the
Trust.
The trust? So on the purchase and sale agreement, it's actually the purchaser's blah, 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 trust.
Yeah. Correct. Yeah.
That's what I wanted to know. Okay.
Now,
Yeah.
is that on any loan? FHA, VA, all of them? It's
Well, you don't have to do it on a VA because you can still assume a
Oh.
VA mortgage, but you can. I've seen it done with conventional mortgages and other, more traditional Fannie Mae type mortgages. So
what about FHAs?
well, FHA, remember, is the guiding body of law. It's like there's FHA provides the rules to follow for both conventional and unconventional lending. Okay.
Okay.
So you're really not getting an FHA mortgage. You're getting some other kind of mortgage that's using the underwriting laws given by FHA. That's
Yeah.
really how that works. Yeah. When I first learned of this, Michael, I was in banking, and I'm like, wait a minute, this didn't like to be like calculus or something here. But if you really look at that, FHA really is a body of law, and it's the legislation. Fannie Mae is a quasi-government agency. It's really not government. It's like a bureau or something like that. It's not like the Department of HUD. That's definitely a government department. A quasi-government agency would be like Fannie Mae. If Fannie Mae does the actual underwriting, they guarantee and underwrite the loan and provide the insurance and all that.
Yeah.
They're just doing the guarantee. They're not a part of the loan. But so that loan is basically from an institution, a
Correct.
mortgage company or something. So that that same concept would apply to just about any loan.
Yep, yep. So what's interesting is a lot of people think conventional loans don't have to follow all those laws. Well, they still have to follow laws given by the FHA, but they're just not as strict. Like in other words, conventional typically is a portfolio loan. The lender keeps the money in-house. They don't sell it in the form of a block of mortgages to Wall Street. Like Fannie Mae, those loans are all sold on the secondary market, blocked together, sold as packages, and you and I can go onto the stock market and invest in them, or we can go to mutual funds and invest in them. Conventional loans are typically kept in the bank that made the loan. They call it they keep that in their loan portfolio. That's why they call it portfolio loan. Those are way easier to get, way easier to manage and do all kinds of crazy stuff with. That's why I haven't done any kind of a Fannie Mae loan or anything that's where FHA has all those strict rules about loans being sold. I don't deal with them. I haven't done that for a year, decades, you know?
So if I buy a property, I'm better off to do a conventional because I can sell it with other issues to be able to sell it and still handle it.
Absolutely. It's easier to get, it's easier to sell. It's just easier all the way around. And in commercial, so commercial loans by default, there are, how do I want to say this? Freddie Mac does provide some conventional lending, some really good conventional lending, by the way, but it's kind of sporadic. It's some years they have some, like years ago, you could have gotten a Freddie Mac commercial loan on a big giant apartment complex at 3% interest for 40 years.
Wow.
As long as you had some of those units available to subsidize housing. You know, I figured like 25% or 75% or something like that. But those programs come and go. Typically, commercial loans are from private lenders. They're like banks that, you know, commercial banks, and the money that they're actually getting to lend you for your property is actually coming from private people like us. They're coming from investors, right? Sometimes they're hedge funds, sometimes they're endowment funds, sometimes they're like life insurance, you know, the pooled funds of life insurance, whole life policies, things like that. You know, it's called institutional money. So in any case, so back to this. Now I lost where I was. Okay, so you assume they get the property in the trust. Oh, I know what I was going to tell you. The trust has to have its own separate accounts, particularly an operating account. Okay, and if you're the trustee, like I'm the trustee, I have to give permission for funds to be taken out of the account. Now they can put money into the account without me knowing or caring, but every so often I'll get a phone call or a text, an email saying, "Hey, Gary, can you approve this withdrawal we're buying another property?" Or they're leveraging against that to buy another property, and I'll have to approve the funding. So when you're agreed to be a trustee for somebody, just know you're going to have some responsibilities. But in return for the responsibilities, guess what I get to do? I get to go to dinner at these outdoor cafes in Florida whenever I want. Sorry, not whenever I want, but whenever we go down there, we have a good time. And they just bought, by the way, a pair of condos right on the beach. So I was down there, ended up helping them get them ready for the first vacationer came in Saturday. And we went and celebrated at a nice restaurant, had seafood. So the stuff works, guys. I mean, I'm telling you, I just saw the you know, second of what I believe is 2 or 4 properties they purchased this way. So in any case, then later on, you can either sell the asset from inside the trust, sell the property, which I don't recommend, or you can sell it, right? And then the proceeds from that sale, you can put into another trust that controls the proceeds from the sale of the asset from the first trust. This could be 10 years later. And the reason that's important is it's held in trust. So far, you've actually avoided, temporarily at least, or postponed capital gains responsibility, because then you can take those funds and guess what you can do? Invest in other properties, and not just other real estate properties, but also other assets, which is a really big deal. You can buy stocks, bonds, everything. So this is why whenever people get scared about 1031 exchange going away, there actually is a really good workaround, and it's using trusts, because they give you more flexibility. You don't have to have a like kind exchange. You don't have to pay a third party intermediary to do the exchange for you. 1031 exchanges are not, they're really not, I actually never liked them because they're complicated. The rules are so strict. you got to identify a property in 45 days and you got to buy it in 180 days. That's tough, because would you agree that the market goes up and down, right? In 45 days and 180 days might be great in one market, but might be horrible in another market. So, but this is typical government stuff. They just lay out these rules and they're not really thinking in terms of business. They're just thinking in terms of, let's get this law passed, whether it's good or bad. So in any case, trusts are a great way to circumvent all those restrictions with 1031 exchanges and give yourself more flexibility. And if you have clients right now, we do have one, Gina Maxwell, his dad is selling a dental practice. He owns the land in the building and the practice. And he was going to do a 1031 exchange. So I said, hold on a second, there's two guys I know in Savannah, Georgia that do these types of trusts. And I said, talk to them first. And they have an appointment with him, by the way. So that may save his dad a ton of money. I mean, we're talking 6-figure kind of money. So any case,
Gary,
yes,
I
ma'am.
have a question. How difficult is this? Because again, the gentleman that I talked to, that has the house that he wants to, I sent him that information, the trust versus the 1031. He likes the 1039, I'm sorry, because he said it's easy. How easy is this to create another trust? And can I have the information that I could possibly share with him to talk to these guys about I'm trying to open up his mind to opportunities.
Right. Yeah. Just like everything else, it's probably hard the first time you do it, but then it gets easier. So to me, trusts aren't hard to understand and not hard to set up. It's just the rules of the trust are hard. Like you got to identify the property you're going to buy in 45 days. I mean, there's more to it than that, but essentially you had a 45-day identification window. Well, in today's market, we might not be able to identify a property in 45 days. It might be gone in 4 days, let alone 45.
Well, that's
then
the truth.
then you got 180 days to close. That's what I mean. The rules of 1031 are too strict for me. Not only that, I'll tell you something else. And this is a good subject because 1031 exchange is another purchasing technique. It's a way for you to delay or postpone your capital gains responsibility. So the way 1031 exchange works is, I have a property to sell. I want to buy another property, and I don't want to pay taxes on the sale of the first one. I want to take all the proceeds and buy another one. So Congress says, oh, great, you can use a 1031 exchange. So what happens is, let's say Gina is an exchange mediary. So the proceeds from the sale of the first property go into Gina's escrow account, okay? Then 180 days later, I've got to close on a property that I identified in the first 45 days, and those proceeds come out of Gina's escrow account and go to purchase that new property, excuse me. Now, I didn't actually avoid the capital gains tax. I rolled them into the next property. You follow what I'm saying? I just delayed it. And what happens is it accumulates. So if you go going up steps, it accumulates over time. So 1031 exchange works perfectly well when you live a long, happy life and die of a ripe old age, and your heirs inherit your properties, and your cost basis starts over. That starts at what the appraised value is at the time of your death. Okay, and you kind of wipe everything out, clean slate. But would you agree to most people's lives, stuff's going to happen. You're going to get a job, you're going to lose a job, you're going to get married, you're going to get divorced. Somebody's going to die. All kinds of things happen. Okay. And I know enough people who've had life events happen, and they're like 10 layers deep, 10 exchanges deep into this thing. And then they need the money, to settle the divorce, whatever. And but the IRS doesn't care. They don't even care if you're Mother Teresa, right? What they care about is, did you follow the rules? So if you have to sell and you need the proceeds because you have to pay something off, and you can't buy the property, all those taxes that's built up over the years become due and payable. And I've had a friend of mine in Colorado that had this happen. His tax bill was $3 million. Okay. And it took him, they tacked on interest and all kinds of stuff just to rub the salt in the wounds. So he convinced me not to do it anymore. And I'm glad I didn't. Because I went through a divorce 2 years ago and I didn't have to worry about that stuff. I had to pay other people, but it wasn't the IRS. So in any case, So back to this 1031 exchange looks good on paper. It works for a lot of people. I'm not saying it doesn't work. But if you really read the fine print, and there are loopholes, like for example, let's say your last purchase was a 20-unit building and it's your fourth purchase and you kept exchanging up to the 20-unit building. If you move into a 20-unit building and you live there for, I think it's 2 or 3 of the next 5 years or the previous 5 years, then you can expunge the 1031 exchange, the taxes. Do you guys know that? Yep. But does anybody want to go moving from a big, beautiful home on the water to moving into their 20-unit building for a couple of years? Probably not, you know? And you can try to play games and set it up there and act like you're living there and Airbnb it out and stuff like that. But all it takes is one person to say the wrong thing to the wrong person and the house of cards comes crumbling down. I have a hard enough time keeping the straight stuff straight. I sure don't want to try to keep crooked stuff straight, you know? So though I see some smiles. Yeah, it's true. So to me, trusts are a much better alternative. They're easy to understand. It's the oldest body of law that there is. Trust law is about as old as you get. And any country that's based on Old English law, which is, you know, Canada, US, England, South Africa, New Zealand, Australia, you know, almost any English speaking country follows the same rules. They're all very similar. And by the way, if you're ever wondering, well, what if they change trusts? Well, I'm here to tell you, in my 58 years of watching the news, whenever there's a political campaign, I've never once seen a politician stand up there and say, and we're going to change all the trust laws. You guys ever heard him say that before? Never, because they all use trust, you know, and they're not going to shoot themselves in the foot. I mean, look at the Clintons. They've got the Clinton trust, you know. I mean, I'm not going to make any political comment. I'm just telling you, you know, they're smart people, and they knew how to avoid, you know, paying taxes and live like kings and queens. Oh my gosh, they paid Chelsea right out of college a $900,000 salary to be the director of the trust. You know, they didn't do anything illegal. You might not like it, but that's what they did, you know. So you can, you know, all those things are available to every single person, every single citizen. There's land trust. I want you to write this one down too. It's called a complex spendthrift trust. Complex spendthrift trust. And we're getting short on time. I got more things I want to cover, but that trust right there, what it does is allows you to take expenses you would have otherwise had in a non-trust operation, like a business or a rental property, and make them expenses of the trust. You follow what I'm saying? So those expenses, you know, property management fees, all those things you pay for become expenses of the trust, okay? So in any case, it's a great way to dramatically reduce your tax burden. I'll have somebody come on. I'm going to invite somebody to come teach a class for us. He'll talk about that specific subject, okay? And it'll really open up your eyes. He's a real neat guy, former Marine. I think he's in California now, but he's moved around a good bit. So in any case, just keep that one in mind. You can Google it and read all about it. It's expensive to set up, but it's a great way to keep your U.S. citizenship and do things legally. I know a lot of people move offshore, but it gets too complicated. You got to give your citizenship, all kinds of stuff, and you know it's just not necessary. There's things you can do right in the country. There's tax law written to help you keep more of your own money. Okay, it's not written to be ignored. It's written to be used. So in any case, let's move on here. I want to talk about at least one more thing here. We mentioned this before, and it's another process that I see used a lot. And Dan Levy's not on, but Dan Levy and I are going to be doing some projects together. He is Josh is on. Hey, Josh, good to see you. I'm going to promote you. And Nancy Lou, good to see you too, Nancy. Oh my gosh, Lisa Sears is there. I didn't see you before. Good to see you. Okay, so where was I going with this? Land trust? Did I say something? Oh, wraparound mortgages. Okay, so Dan Levy's looking at a property in Norfolk, Virginia that he wants to use for traveling nurses, temporary housing for traveling nurses. So he gets more rent per unit than traditional rents. In fact, you guys should probably write that one down. That's another thing Rick and Anna do. They rent rooms to traveling nurses because they get more rent for the room, therefore more rent for the property. In any case, the owner of the property has an existing mortgage on the property, $175,000 mortgage, okay? And I think he wants $450,000 for the property, okay? So what Dan's doing is he's offering him a wraparound mortgage for $350,000. What that means, and he's going to hold a note for the remaining equity for $100,000. So, by the way, that other note, he's bringing in other investors to each put in $20,000, 5 people, $20,000 a piece, and he's going to pay them a 10% flat interest rate at the end of 14 months. So in 14 months, they earn $2,000 on 20,000, and he pays them off. Right, that's going to be $110,000. Pay them off. He's going to pay them off in 14 months. So he's got $110,000 in due to these other investors. Now, remember I said he's going to give these guys a $350,000 wraparound mortgage. Their existing mortgage is $175,000, which means the mortgage he's giving, Dan's giving the seller, is twice as big as the mortgage they currently hold. So the money he's going to pay them on that mortgage, the $350,000, is more than enough for those guys to pay their current mortgage, plus have some cash flow. So now they got cash flow, and they got this other $110,000 coming in. They get to sell the property for $450,000, right? Now, what Dan's going to do is, after he's seasoned the property for a year plus 2 more months, is go and refinance the whole thing, right? He bought it for $450,000. He'll probably get a $375,000 mortgage out of it, enough to pay off the wrap mortgage of $350,000 plus $25,000 for expenses. So I wanted to bring that deal to the table because that's something we're currently working on now, and we're using it as a prototype. We're going to develop a program out of this for short-term housing, not Airbnb, but like traveling professionals, traveling nurses, things like that. And once we perfect it, we're going to roll it out to everybody here. You're all going to get to have access to it and use it with your clients and your markets too. So we're going to, it's one of the things we do, what we call level 6. Dan's a partner. Dan was in the very first class I ever taught.
Gary,
Yes.
where's the 110 coming from in the 14 months? Is that,
Yep.
where's it
So
coming from?
he's got 5 other investors, private people off to the side that want to kick in 20,000 a piece.
Yep.
So collectively, that's 100,000.
Yep.
Right. And that's going to go
Paying
to,
back.
he's going to pay it back in 14 months. When he does that, he could probably get a mortgage for the whole thing, or just simply pay off. He has, without going into too much detail, one of his businesses, he owns a couple businesses. One of them is selling respiratory equipment. So what do you think happened to Dan in the last year?
Yeah, woohoo.
He got a
Wow.
big, he's like this, big smile. So,
Right, makes sense then.
yeah, so he's doing pretty good now. Now, the way you structure that is this. You would want to make the sales price, or you want to fix with the property, raise the rent, so it's not only worth $450,000, it's worth $550,000. And so he could do that, Gina, in a year. Once he raises all the rents, and he can justify the property's worth $550,000, and there's your extra $100,000. That's typically the way you do a deal like that. Yeah. So, but he did say he's one of the, he's a nice guy, by the way. I don't know, Gina, do you remember him? He used to be in one of he was in one of Keith's market centers, and then he went over to Greenbrier, and I forget that owner's name.
Yeah, Rob
you know,
Daniel, and Lee Beaver's son owned it,
Yes.
and Rob Daniel and I can't remember the other guy's name, Mike something.
Yeah.
Yeah.
Yeah, that's so Dan's a really good guy, former Navy, and he also owns a commercial cleaning business. Now, guys, you know what? I think I'll have Dan on. How about that? I'm going to have Dan on. Invite Dan to class. You guys will like him because he's the prototype entrepreneur. We'll have him talk about this deal too, by the way. And the thing is he leverages his commercial cleaning business to serve other investors, right, who have bigger properties. So in any case, pretty smart guy. Right. Now, I just gave you a real mouthful back there a second ago. Does anybody have any questions, or does anybody need me to repeat that process? How he's using a wraparound mortgage and what that means? Okay. So one thing to consider here. Well, we're always looking at upside potential versus downside risk. Okay. So the upside potential is Dan Levy gets a property that's currently being rented out at traditional rental rates, say $750 a month per unit, 6 units. Okay. When he turns it over to traveling nurses, there's a hospital right down the road. They can easily walk there or ride a bike. And he, by the way, Dan's also a licensed nurse. Okay. That's how he's able to sell respiratory therapy equipment. Because of his knowledge of the business, he knows traveling nurses need a place to stay. Well, guess what? They'll pay $1,500 a month for a place that they would normally pay $750 for a whole year, knowing they're only going to be there 6 months, and their employer generally pays it, and it covers all the utilities and everything else. So he's going to essentially double the rental income coming in on the property. He's going to pick up some additional expenses because he's now paying all the utilities. Okay. But here's some downside risk to doing a wrap mortgage. Okay. Dan is doing the wrap mortgage with the full faith and trust that the owner, the seller, is going to continue to pay on his current mortgage. You follow what I'm saying? So Dan's mortgage wraps around the existing mortgage. It's bigger. It provides the seller enough money coming in on those mortgage payments to cover their existing mortgage payments, plus a lot of extra cash flow, and they're happy with that. But what if that current owner gets hit by a bus, right? Dan could be in a pickle. So yeah, there's things you can do. You can draw up a lien that doesn't get recorded, but if something goes sideways, you can record a lien and stake your claim on the property. But you then have to make good on the first mortgage. If you're going to do that, the lender will listen, right? And it'll give you a chance that I know the documentation will say, no, we're going to call it on the note. But if Dan says, look, technically I've been paying on it for a year, and he can document he's been paying these guys money. And I've seen this happen before. There are banks who actually will look the other way. They'll say, you know what? We'd rather let this guy keep it than go through all the fuss of taking it back in foreclosure. It's an expensive, lengthy process, and the property goes to, you know what, in the process. So in any case, one of the risks is the seller doesn't pay the current mortgage, and they take the money that Dan gave him and run.
Could you mitigate that though by running the seller's current mortgage through a trust company that all they use it through is a pass-through?
You mean take you take proceeds and put them in like a separate account? Proceeds.
Have part of the package be that the seller must pay the trust company instead of paying the mortgage company, and then you've got somebody that can verify, hey, look, the house was made this month.
Yeah, I'm sorry, Jen. In this case, we're actually not using a trust. We're just doing a straight wrap.
I'm sorry. I meant an escrow, like an escrow company.
Oh, you could do that yes, you can do that. You can
What's
have
wrong, Alex? What's wrong?
Okay. Hey, Reese, I want to meet you.
Gary,
What's wrong?
hang on, somebody. I'm gonna mute somebody. Hang on 1 second.
Yeah,
Okay, go ahead.
yeah.
So
back in the 90s, I did some of those wraparounds,
okay.
but I had, and it may be different now, I don't know, but I was able to get myself onto the mortgage account. So I had access to the account to verify to check every month that it was paid. Is that still possible?
Yeah, well, that's a good question. When I was in banking, if we added somebody to the account, they technically had to also be on the deed.
No, I wasn't on the account. I was basically had access to the account so I could see what was being paid also. I wasn't a part of anything. I was just I was granted the ability to be able to get in and look at the documents. Like today, you could do it online.
Yeah. Okay, so they may have given you maybe a login and password or something like that, I guess.
Basically.
Okay, that's different. Yeah.
The mortgage company knew I had that access on it.
Okay. Yeah, that would be different. I was thinking you were saying they added you to the.
No.
Yeah, because then in order to do that, you have to be on the deed or banks. Yeah. Okay, that I can see that working where you have sort of like an audit review capability. But again, they could probably, change the password.
Yeah.
But the reality is the real fail safe is you generally you document a lien and then you don't record it, but if you needed to, you can record it, and that gives you basically first right of refusal, puts a stop on everything. You can go to the bank and say, look, I'm the one that's actually making the payments. Here's the documentation, so forth and so on. And what Gina was saying, could you take some of the proceeds? Here's what I would do, Gina. Instead of relying on the seller to put their monthly payment in escrow for an attorney to send it in, is take proceeds that equals 14 months of mortgage payments from their part from that 100,000 and keep that in a separate account, that's held in escrow. That would work.
Okay.
Yep. If the seller would agree to it. Yeah. But then you got to pay the attorney. I mean, just like anything in life, you got to look at upside potential and downside risk, and what can you do to mitigate the risk that's within the law. And so those are things that would work.
The reason why I asked is because we did lease purchase, and when we did those, it was the same deal. Sometimes the sellers would not make the payment, they would just grab the money and run.
Yes.
And so we used an escrow company that was a tiny percentage as a pass through, and had the escrow company make the actual house payment as a way to protect everybody all the way around.
Yeah. The same risk exists even with a traditional land contract. The difference is the land contract, at least you're given some title rights.
Yeah.
With the wraparound mortgage, you're not given any title rights,
That makes
so
sense.
yeah, that's a big difference. So in any case, I want to explain that because it was something that came up recently with Dan. I thought, well, let me talk about that one tonight. It's a very easy one to understand. It's not too complex. You're really, the name of the game is you still need to improve the value of the property as quickly as possible so you can go out and refinance it, pay everything off, and then you get your property free and clear. I'm sorry, not free and clear. You get your property unencumbered. You own all the rights of ownership. Unlike a land contract where, really that could be 10 years and all kinds of things could happen in 10 years. Farmers used to do land contracts a lot, right? That was a very popular thing with farmers, especially when interest rates were so high. And inevitably, farming is a hard life. So things will go wrong, and then things will go to court, and somebody would change property. Here's what would happen. If you do like a wrap mortgage or a land contract, and you're the buyer, and you say, you know what, I don't want to pay all that insurance. It's too expensive. I'm going to get a cheaper insurance policy. And they don't realize that the lender is always named as an additional payee on the insurance policy. They do that to protect themselves. So if somebody doesn't pay property insurance, the lender's notified, right? And they can say, hey, we're gonna pay on the policy. But if they see a policy changing, they're gonna wonder why. They're gonna start looking, they'll start digging, and they can find out what happened. So I generally, with these kinds of things, I would definitely use a title company and a title attorney that knows what they're doing to document things correctly. I generally would not do a land contract. I know people like them. I just never did, because to me, you're not really, like people will say, well, the bank won't know if you don't tell them, but you're just still basically essentially, in my opinion, just my opinion, it's fraud, because if you can't tell everybody about it, then something must be wrong with it, right? So in any case, any questions on the wraparound mortgage? Everybody okay so far? Guys, it's something you can easily show to your clients. If you don't feel like you can discuss it, then go here. Okay. Oops, where's the, is it over here? Here it is. Can you guys see the screen?
Yes.
Okay, this is in the massive passive cash flow method book.
Can you zoom in a little bit more, please?
Zooming in, let me see if I do. How's that?
Perfect, thank you.
You're very welcome. Everybody on the team has this. This is the sixth book. It's 300, 400, 500 pages, I forget. But this chapter starts on page 175. Okay. And if you scroll down, I think there's like 30 some odd techniques. It describes different sources of funds you can get access to. Then it goes into all kinds of techniques. Pledged asset mortgage. I'm not going to go in a lot of detail. This is literally where you would pledge assets that are non-real estate assets, like jewelry, paintings, coin collections, collectible cars, anything that has value, boats, certificates of deposit, nobody uses anymore. Then you get into some basic stuff. Here's a blanket mortgage, okay? Blanket mortgage is different than well, I shouldn't say that. Blanket mortgage encumbers multiple properties. That's different from a wrap mortgage. We'll save that for another discussion. You can use your commission. You can make a loan based on your commission, okay? So somebody can close a deal and pay you 6 months later with a 10% interest rate or something, I haven't seen that kind of thing done for. Those are things that are done in the commercial world. Buy low, refinance high, create a note, okay? So anything that has any type of payment plan or deferred payment can be sold. You technically write a note and you can sell it for cash, sell it at a discount. You can do that with your commission too, by the way. If you ever work on a long-term lease, like a commercial lease, 10-year lease, for example, you can get paid out every month for the next 10 years, or you can say, I'd rather take my money now, all right, and take a discount on my overall commission, right? You're just weighing the pros and cons of time versus money. And right now, the way inflation is going, that would be a good technique, okay? In any case, you can read all about these, and I would highly encourage you to do that. We get into FHA in here, all kinds of stuff, different government programs, partnerships, joint ventures, 1031 exchanges discussed in here. So I think it's probably about 100 pages worth of material. Most of these things I've done myself, except all of the government programs. I haven't used all the government programs, which was a whole section on that, okay? Government programs. So there's a bunch of them out there right now, actually. So in any case, definitely read this, study it. You can't give the entire book to someone who's not on the team, but I'm okay, this is my opinion, if you share the chapter on creative purchasing techniques, because if it helps you land a client, it's worth it, right? The other books, the first 5 books, you do get full access rights to share with others. That's like the way it works is I can't actually sell you anything, but I can give you some of the original source material I used to write the books. But the first 5 books on the website, you guys can use those to hand out to your prospects, and you get credit for being nice and giving them a gift. Plus, not only that, they'll learn the same methodologies and terminology that you're learning to serve them. Okay, let's do this. Before we go, we're at 8:03. Normally we don't finish this quickly, at least in the last several months. Do you have any questions? Anything you wanted to discuss that we didn't discuss, even if it's a different subject,
Gary, I have something that I wanted to say.
Okay.
I had my license released from Keller Williams a week ago, and I'm still not with EXP. And if it wasn't for my husband, I wouldn't be able to do any transactions.
Mm-hmm.
So I don't know, and I can't figure out who to call or who to contact.
So
What state are you in?
New York.
Okay. Garrett?
So what happened, Deb? I know your husband, so your husband signed on, is that right?
Yeah, he's with EXP. And
Yeah.
I mean, I just had a listing that I put on under his name. And I have more people that I'm taking out and all that. And meanwhile, my license is nowhere. It's not even.
So has he gone on to the world and gone to the New York State broker and have found out where your license is? Or have you gone on?
I don't know how to do that.
Hey,
Okay.
Hey, Deb.
I'll walk you through it tomorrow if you want to.
Okay, how do I get in touch with you?
747.
1 second.
Yep.
Everybody start writing. No, just kidding.
Yeah, no. 747.
Yeah.
888-7772.
Okay.
Just
Gina.
call me tomorrow. Earlier in the day is better. Call me tomorrow. I've got some open.
Are you on the East Coast?
Yep.
Okay.
And I'll walk you through what I do when we've got someone lost in limbo land.
That's where I am.
Yep.
Yeah.
Thank you.
You're welcome.
Gary, I have
Yes.
a question. I have a client who is going to be selling about a $3 million house and buying a $1.2 million house.
Okay.
What would you recommend would be the best way to avoid taxes? Can he put that money into a trust?
Yeah, but is this his personal home?
It is, and he should have the over 55 exclusion.
Yeah, I'm thinking if he's over 55, I can't remember, Susan, if there's like a maximum on
Yeah,
that.
you're right, me either.
I just can't remember. I want to say 600,000, but I don't think that's true anymore. I mean, what I would recommend is, I'm sure if he has a house that size, he's got a tax attorney. First, ask them what is the IRS limit on the one-time exclusion on capital gains of sale of your personal home for over 55. And if it's anything up to 5 million, he's in good shape. But if it's something like that caps out at like maybe caps out at 1.2 million, what do we do with the other 2.8? Now, the thing I was talking about earlier, that was for the purpose of selling business assets. So I'm not sure, Susan, that same approach, directing the proceeds of the sale directly into a trust, would work on a personal property. I don't know. I'm thinking that it actually does, but I'd rather have that checked out. So if you want to, if you go online, there's a guy named Warner. Let me hang on. What's Mark Warner? Okay. Let me go back here and I'll find I just spoke to him the other day myself. This was, Mark Myers. I'm sorry, Myers. Mark Myers. Let me do this. I'm going to get you his information right now. Mark Myers. Okay, his email, I'm going to copy and paste it into the taskbar. Okay, let's go back here. Let me do everyone. Okay, that's his email, and that's his website, peakprofitsolutions.com. That guy's pretty knowledgeable. He can tell you, I'm fairly certain off the top of his head, if a personal home, proceeds from the sale of a personal home can be directed in a trust and avoid or postpone capital gains tax. Anything that would, if he had to pay capital gains tax, that would be the question. And he's usually pretty good. I mean, I spoke to him Friday and he was on the phone with me for like an hour, By the way, I'm going to have, that's the guy I'm going to have come teach a class for us on all those trusts, the different types of trusts. He knows all about the using whole life policy, cash values for investing. People don't realize this. That's been a technique of the uber wealthy for a long, long time. They would set up these whole life policies, not just for the death benefit, but because you build up a cash value and you can invest in them. You can actually plow a lot of money into those up to a limit, like so much per year. So if you have like a $300,000 windfall, you can purchase a big $10 million whole life policy, and it lets you plop in 60,000 like right off the bat, 1/5 of your cash, and start to reap the rewards of get all the benefits, the ability to borrow against yourself, right? And when you pay back, you pay yourself back, just like the old 401k days. And it's a non-bank loan, so that it doesn't have to follow all those crazy rules. You're not paying hundreds of thousands of dollars in closing fees. You're not paying anything. It's you borrowing against yourself. And all the interest coming back in is completely tax-free, So there's tremendous benefits to that. So he may be able to utilize some of that also, Susan. I would definitely talk to Mark and just tell him I said hello. And he's the kind of guy we want to make our friend. So let's if we can give him some business, he'll and you don't have to pay him a dime for it.
Is that the guy you introduced us to before? When you did a tax seminar?
No, that was I forget his name. I think
Was that Neil?
it was Neil.
Lou Brown.
Hey, Gary,
The trust that needs
this
to-
is the link you sent me the other day, but it came up with nothing on it. The Peaks
know what?
Profits.
I couldn't get that link to word either. So you know what I did? I just Googled it and went to the link that the Google search results gave me.
Okay.
Because something was wrong with his link. I couldn't figure out what was wrong. I couldn't see anything. It was the same syntax. But sometimes those links, if you right click on it and open it up, under the embedded coding, something got messed up there. I've seen that happen before. And you have to, I have to tell him about that. I forgot to tell him about that. But if you Google peak profit, what was that?
Peak Profits
Solutions.
Solutions.com.
Yeah, just Google that. You'll get the websites and you can go on there and he has some free information, different, I don't know, reports and links and webinars and stuff like that. So. Yep.
Gary, when he does come talk, can you specifically talk about whole life also? Because I've got whole life and I'm getting ready to use it. And I would like to know the interest side of it and how that works.
Yeah, definitely. Matter of fact, we may have to have him on twice, maybe once for that and once for the trust. And the thing I like about him, guys, is when we use him, we don't have to pay him. The companies that do the whole life insurance and the setting up the corporate accounts and setting up the trust, they pay him. You see what I'm saying?
Mm-hmm.
So, yeah, pretty good deal. Any case,
Hey, Gary,
yes.
I'm sorry. You were talking about a book that you have that you were talking about it earlier that we could read about 100 pages. I'm sorry, I missed that. I see this US code, but was that didn't seem to be what you were talking about. Did I miss something?
So, Beverly's gonna, so Beverly, when you listen to this, if you could send everybody the link for the massive passive cash flow method, that would be great. So you guys can get the electronic version that you don't have to pay for it. You get it because you're on the team anyways. And I guess anybody on here that's not on the team, I guess you get a freebie there. I think everybody here is on the team though, but just remember it's the I think it's, let's see, 1, 2, 3, 4. I think it's the 5th chapter. It begins on page 175, the creative purchasing techniques. And I want to tell you guys something here. Again, just my opinion, but watching what's happening in the news, in the economy, in the real estate market, and in everywhere, I'm watching and listening to what big corporations are doing, hedge funds, and some pretty affluent people, and they're gearing up for a correction. They're not waiting around because that's what smart people do. They read the signs, they turn off the television and look at the actual facts, and they're pretty sure what's coming on the road. They're starting to gear up. They're building company. I know one company is actually building a company specifically for buying residential real estate. Okay. So I'm going to just be as blunt as I can possibly be. If you're not using ReallyFlow to generate a file of investor-owned properties, you are missing out. Those relationships need to be built now, guys. I'm telling you, I've been through this 5 times. And you don't want to wait and see what's going to happen kind of a thing. You want to absolutely flat out get on the phone. And Bonetta's a perfect example. Bonetta, you still on? Darn it, she just left.
Yes, I'm still here.
Okay. So Bonetta, I know we talked about this before, but you called the first 100 people on you had a file of like 400, right? And you
Correct.
called the first 100, had
Yep.
15 conversations. 15, that's great. That's awesome. And already the first guy's called you, and now he's looking at you listing, and he's got 8 properties altogether or something like that.
He does.
So guys, I'm telling you,
I have a giant favor. Who can do a Zoom call tomorrow to get us all the way through the Fiverr process to having that all turned in and paid for? Who can do that tomorrow?
The Fiverr?
Who can get me from my RealFlow list to the guy who does skip tracing on Fiverr from start to finish?
Gary gave me the list. When you contact the guy, he'll walk you through everything. I just did 1,800.
Contact which guy? Anaskill or whatever.
Yep. And
Gary,
you send him a note on Fiverr and he'll immediately respond back with I think it took him 30 minutes. He walked me through the process. He had 1,800 of them done. I think he charged me $54 or something because I put Gary's name out there.
Mm-hmm.
And, he gave me 1,800. And out of the first 50, I picked up 2 investors that have properties that are going to retire.
Yes.
Cool, 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 cool.
One guy's got
So,
30, one guy's got 12.
so is that a phone number?
Mm-mm.
You
Fiverr
got,
is a,
you got that
Can you
link,
please-
Gary, to
Can
him?
you please
The
put
link.
that
Okay,
link?
I've been on that link. I haven't gotten to the end of it. I don't know how to get through it.
Could you
What-
share that link in the chats?
Yeah, let me grab the link real quick. But I think what Susan's saying, she wasn't able to get through I guess there's instructions in the link.
No, well, I just sent him a note and he sent it right back to me, told me what to do on Fiverr. It was really simple when he gave me the instructions.
Yes, can you share
Can
his
you
contact?
forward your note to us?
Put it in the
Gary,
chat.
Gary gave me the link. You got the link, Gary?
I'm gonna type it in right now. Chat, let's see. Everyone. So Michael, you just use that link, send him a note on that link, and that's how it started?
Click that link. It takes you to his Fiverr site. Send him a note.
Okay.
You gotta download your file. Gary walked me through the file. It was actually wasn't that bad once I figured it out. And then I sent him that file. He sent me back a price of $54 with taxes and everything. And he had it back within 24 hours.
Okay, so here's his page.
Yeah,
So
right there.
if you scroll down, there's a place you can enter a note.
Contact me is where I went to.
Okay, thank you so much.
Thank you.
Contact. Where's the contact thing?
It's that
Right
blue-
under
it's
his,
a-
on the left-hand side of your
Oh,
page.
there it is.
Yep.
Oh, perfect.
Contact me.
Okay,
Send him a note. I put Gary's name in there, said Gary referred me, said to contact you to do the search. He asked what I put in there that I had about 1,800, I think 1,750 something leads just in one zip code. And he had it back within 24 hours.
and look at how young he is. He's got to only be like 3 years old or something. you
That's
know?
his kids. I asked him.
Has anyone encountered challenges exporting the spreadsheet from ReallyFlow? That's where I'm hitting my challenge.
I think Michael, you sent him the zip file, right?
I said, well, yeah. So what you're saying is you are having problems downloading the zip file?
Yes, from
Okay.
ReallyFlow.
So Gary showed me, you go up, do your search. And I'm trying to remember, you go up, do your search.
Yep. And I'll show you guys here. This is a great, I'm telling you guys, listen to Bonetta, Michael. I mean, if you want results like, so Lisa Sears, you got your ears on?
Yes, I do.
Good. Yeah, this will definitely, I mean, not just the now business, but the thing is with the investors guys is, boy, you do them right. You got a friend for life. I mean, I still have people calling me today. I mean, I go to dinner with them and stuff, you know? Okay, so we always start with lead pipes premium and then click on property leads. And this is recorded, guys, so you can just kind of watch now and not really worry about taking notes. I always start off with scrolling down and using board investors. I always start there because it's, your question mark tells you that's the information. It's investor-owned properties greater than 10 years, which is really critical. It statistically, we know that people own properties 10 to 12 years are more likely to sell in that time frame. And we know that they're not owner occupied because they check the property tax records. So we click on that. Then right now, I'm just focusing on shingles, condos, and townhomes. I'm not looking at multis and apartments and other, because guess what happens when you put a listing out there for a single family home or a condo or a townhome? Everybody and their uncle comes out of the woodwork wanting to take a look at it. It's a lot easier to sell shingles. Everybody needs them right now. So we focus on those, the ones that are being used as rentals. Then you give it a zip code. That's one of my old favorite investing areas. You hit search, okay? Now, if you want to really increase the probability of success, don't just do board investor, add high equity. That means they've also got a lot of equity so that they can, hey, I can really cash out, get a lot of money, wait till next year, buy more properties for less money, you know? So you can click high equity, but the bottom line is this. Now I've got to delete these old leads here because if I don't, the results will get skewed. So I do remove all. Yes, I'll remove all those. Go back to where I was. This is the search I just did, 188. So I click on this little down arrow here, select all 188. And if you notice, it popped up here, my leads 188. That's where they went. Then you click on that. Now there might be an easier way to do this, guys. This is just how I learned to do it. Here's the download button. So you click here, download CSV, get standard. Just do the overview because it gives you the owner's name and the address information. And I mean, you can get all this other stuff. It's just not necessary for the purpose of getting a phone number. Then hit export. So hit export. And now at the bottom of my screen in another minute, there it is right there. There's the zip file just popped up there. It's in my download folder. So if I go to my download folder, okay. There it is right there. I just saved it. Then you attach that in an email to ANSAC and he'll do his business, you know? So I tell you, you're very, very welcome. I'm glad this is why we do these classes, guys. I'm so grateful that this is bearing such just wonderful fruit for everybody and everybody on the call tonight. Boy, and Alexander, this is what we were talking about the other day. I would do your zip code, Ursula, everybody. Get working with these people, not just for the now business, but to position you so that when things go into correction mode, I can tell you this, you know, if you look at my records, my history of transactions, the greatest number of transactions I had were in the first 3 years of the recession. It was ridiculous. I mean, we're talking thousands. I don't even know how I can, you know, when I first met Gina, she was asking me, how in the heck did you do 110 transactions personally on your own with no assistance, no admin?
Fireside.
Yeah.
Fireside. I had 85 listings active at any given time, but to do 100 and some buyers.
Yep. And the thing is, guys, I didn't think it was anything spectacular. I really didn't. I just created the system. Everything I'm teaching you guys is what I did. And the reality is I thought, well, the math is this. The average client bought 4 properties. So there's 26 clients, each bought 4 properties. Some bought 10, some bought 1, but you get the average of 4. Investors generally don't want to go to closings. So I never went to closings. It was all done electronically, okay? That's one big giant myth about real estate is you got to go to the closing. Brokers always go to the closing and take some flowers or champagne or something. I'm like, my investors never go to closings. And I don't even drink champagne. So
What do you mean you don't drink champagne?
I drink Guinness. That's what I drink. I drink Guinness.
Oh, I love fine champagne.
Yeah. Well, when we go to Vegas, I'll have champagne with you. I promise. I don't have anything.
Good. I'm getting there a day early. I'm ready.
Good. Okay. So in any case, no closings would save the bundle of time. No inspections. Investors generally don't do inspections. That saves a bundle of time. And the appraisers by that time all had their own keypads. There were properties I closed I never even saw. You know, it literally became a factory line. And when I built the brokerage company, I mean, I think we did somewhere between 3,000 and 5,000 in those short years. It was just absolute factory line. And you know, I don't know what the future is going to hold. All I know is, guys, I've seen it before, and the fundamentals are exactly the same. You can't fudge economics. You can't fudge supply and demand. You can't fudge inflation. It is what it is. It's real, and it's starting. And when I'm getting calls from hedge funds. One of them I worked with 10 years ago. Eric Delgado, he was crazy. I saw him in Washington, D.C. When I went to speak for Sprint, I saw him there, like, holy crap, I can't believe this. So in any case, he asked me, he said, are you ready? And I said, I'm pretty sure. I said, we got about 70 some odd agents across 24 states. You let me know when you're ready to go. And the new national director of Fannie Mae messaged me on Facebook. He asked me the same thing. He said, I knew him because he was an account manager 10 years ago. Now he's in charge of everything. Said, are you ready? And I said, we're ready. I said, by the way, I don't just work in one state. I got agents in 24 states. Okay, so I'm pumping you guys up every chance I get. Another technology company wants to work with us, and they want to do it the old school way. They want to go us to go out and find properties individually for them. And I said, well, that's a different ball game. We'll have to talk about that. So the fact that I'm getting those calls, guys, tells me these are the experts. These are the people that control billions of dollars. And when they're seeing this and they're making these phone calls, you know, I'm not the smartest person on the planet, but I'm pretty sure they've got numbers to tell them that this thing's going to be starting sometime in the near future. I can't tell you the day tomorrow, and you just don't know. But why take a chance? Why not prepare now? Get the listings now, get the clients now. So when it does hit, you're ahead of the game. I promise you. I went to 5-star conferences where thousands of agents were falling all over each other. I mean, literally elbowing each other to hand business cards to a few precious asset managers. It was embarrassing, you know? And I, you know, don't be that. You don't have to be that person. Be prepared, do it now, get the relationships going now. And I promise you, like I said last week, or maybe 2 weeks ago, the success you want is on the other side of fear. It's that thin layer of cellophane. You can poke through it if you just try. Making that first phone call, get that first one out of the way. Don't worry about getting a home run on every phone call. The ultimate aim is the exercise. The value is in the exercise. The more phone calls. Bonetta, did it get easier when you made those phone calls with each phone call? Uh-oh, she might have gone to get ice cream already.
No,
Hey.
I'm here. It just takes me. I'm always doing multitasking. It did. You know what? As I told, I think I joined the Diva book club, and I think I shared with you, making phone calls now as opposed to 6 years ago when I started is a world of difference, because 6 years ago, I just felt defeated. I was the 99th, you know, or 999th realtor to call somebody, and calling these people is a piece of cake. I mean, they actually talked to me. I was shocked, and they were polite. Out of the 100 people I called, I had one lady that said, did you see my property with a sign in front of it? And I said, thank you very much, lady. Have a nice evening.
Yeah.
I kept it moving. But the difference in making the phone calls to these folks, because I was like, oh my God, if the other realtors knew what we were doing, we wouldn't have a chance. But these people are waiting.
Yeah.
They're patient, and they actually listened to me. I mean, they didn't like hang up the phone. I was shocked. I was like, 100 calls in one day. I've never done that. Never done that in my entire career.
Yep. It's so much easier when you talk to someone on the phone who owns a property for investment purposes versus it's their own home they live in. They're profit motivated.
Absolutely.
You understand capital gains could go up. You understand the economy is probably heading for a correction, and the real estate market's at its peak. So they're willing to listen. I mean, expires and physicals, let's face it, guys, those are not phone calls to make. And that's not what this is. You're calling people who are not in distress. They're investors looking to make a profit. And when you use that script, they're going to listen. Say, Michael, would you agree these investors are easier to speak to than?
The way I got it, the way I do mine, so I don't have that call fear, is I had the spreadsheet. So my goal is to clean up my database, get rid of the bad numbers, and find the good ones. So I'm not looking to call somebody and talk to them. I'm looking to clean up my database, get rid of the bad numbers and stuff. Doing that, I get a number, then I ask them if they're, selling or what the situation are. The 2 that I did on that first 50, I didn't talk to. They called me back. So I always leave a message. They called, because in my message is, this is Michael, EXP, local realtor. I'm looking at, you've got this property, wanted to know if you're interested in selling it. If this is the correct information, right number, please give me a call if it is or not, so I don't pester you. And I'm getting calls back from people saying, yeah, I got the property, but I don't want to sell it. Okay, I cannot hassle them. But I found that when I started saying, call me back and let me know if this is correct or not, so I don't pester you, I started getting calls back because they're thinking, oh shit, he's gonna bug the hell out of me if I don't call him.
Will,
Are you using a smart number to have them call back and that way? it
No,
goes
I'm,
right-
you know what? I'm using my cell phone. If I do anything out of KV, I'll use I got a separate phone number for myself. I'll use that in my marketing on KV, but I like you to call me on my cell phone. I want you to get me. So that's what I use, my cell phone.
Well, I just tested my smart number for the first time and it rings right through to the cell phone, but it goes into KV Core, which
It
was
does.
really cool.
It does, but
Mhm.
I'm using KV. I'm gonna use KV Core for marketing, and then I'm gonna pull them out of that into my personal thing. Now you can use Google Voice, and you can ID your cell phone on it. You can put the ID for your cell phone. It doesn't show that number. I don't know if you can do that on the smart number that I got with KV yet. Haven't got that far.
Gary, this
I
might
want people to call me.
this might be too long of an explanation, but I'm not really quite sure what you were saying about the correction. Like, why are people trying to get numbers? If we have inflation, the rates go up, people buy less. So investors are trying to pick up property cheap, I'm sure, but I don't quite understand how these people are all getting ready for what exactly.
For a market correction, for basically, I don't
Right.
want to use the word recession, but it's essentially what it is. And but it's just part of the business cycle, guys. I've never seen an up market not go down, but I've also never seen a down market not go up. You know, so it's
But
not
we're
really to worry
looking for
about.
listings. We're looking
What's
for
that?
listings, or are we looking for investors to
Oh,
buy?
there's a discussion we're having now with Michael and Bernetta, calling these investors. This is you getting listings. Okay. These hedge funds and those guys, they're looking to buy. They're our competition. They're going to come in and they're going to start buying what's called tapes. So Bank of America is going to have a tape is a block of $100 million in mortgages. And they put them in categories like A paper, A plus, A minus, B, all that stuff. They're going to try to sell what they call C and C minus, which is really crap. It's C for crap. And these hedge funds will buy them. Okay, pennies on the dollar. Now, the thing I like about hedge funds is they'll buy $100 million in properties or $1 billion, but they'll quickly try to get rid of a lot of them and they'll use us to do that. So we'll get listings that way too from the hedge funds. Okay, but make no doubt about it, these big companies, endowment funds, things like that, they are moving into real estate because they know it's a brick and mortar tangible asset that throws off income. Unlike stocks and bonds where it's a paper asset, yes, it can throw off some income, but it can also take on some serious losses. Real estate at its worst has probably never lost more than 50% of any market, you know, and in the worst markets. So in any case, Susan, what I'm saying is when they're looking at the numbers, they're looking at real inflation, which is right now a pretty flat 10%, which is big. That's inflation at 10%. That's scary. That'll put the kibosh on any good economy. They're also looking at the cost, what they call the breadbasket cost. That's your gasoline, food, medicine, clothing, things like that. It's all gone up. Capital markets, big. When I say capital markets, I'm not talking about like traditional mortgages. I mean big loans, like big, you know, $10 million, $20 million loans. Those people are holding back. They started doing that last year. And when I started seeing that, I was thinking, okay, they know something's going on. So what these companies are doing, they're gearing up to start buying a lot of properties. Right now, the forbearance, from what I understand, is going to go ahead and be relieved in September. The moratorium, like on evictions and things like that, they're saying they're going to continue it again. But they're not saying that with forbearance. They're saying forbearance are going to let out, cycle through in September. Right now, 30% of the mortgages in the country are underwater. 30%. Those are depression era numbers. Okay.
Wow.
So yes, so these are some major factors. Another major factor is this. Would you all agree that for the last year, people have pretty much been overpaying for these properties?
Yes.
Yes. So when things start to turn, all right, and people got primary homes and vacation homes and things like that, and they have to make choices, are they going to let go of their primary home or their second home?
Second home.
Second home. Now, the other thing is this, it's not so much that they overpaid, it's when life events occur. You know, like in the last recession, people that they kept their job and stayed healthy and stayed married, they didn't have a problem. They were still making their mortgage payments and everybody's happy. But when people have those things occur, loss of a job, divorce, death in the family, when crises occur and they've overpaid, so now the values are back to normalized values, but they bought it up here, that's what they call being upside down. And they're going to make these tough choices. Do I tough it out and fight it out and try to keep this thing going? Or I just walk away? Because right now, when you're upside down, it means you have no equity. You got nothing to lose by walking away. And that's exactly what happened. People were literally leaving their keys on the kitchen counter, sending a note to the mortgage company saying, come and get it. The keys are on the counter, you know? So for me, that last part is the real problem. All these other things are just basic economic factors. But the fact that everybody's been overpaying, and I know in any society, 330 million people, there are going to be some divorces, there are going to be some deaths, there are going to be some lost jobs when a recession occurs. All those people are going to make those tough choices. And our job is to go in there and help get those properties back on the market and get the neighborhoods back in being happy because the house isn't sitting there empty with cobwebs and tumbleweeds and weeds and everything going over the place. You definitely want to get out there now, because when the hedge funds kick in and the banks start unloading tapes, that's a whole chunk of properties going off the market. They'll come back on individually. They'll use us to sell them, but it's far better to be on the front end and get them on the front end. So that's what I mean by competition. They're going to leave Wall Street and they're going to go into real estate. They're already starting to do it. The same thing happened last time. Same exact thing. Wall Street commodity brokers were forming closed-end mutual funds. And the only reason I know that is because I was one of them. I was part of it. We cleared a closed-end mutual fund where we bought blocks of properties. And I was the broker. I got all those commissions. I got all the property management contracts. I could have retired off that one deal, you know. But the only reason I was able to do that is I was already working with investors. They could see all the transactions. They could see everything I did. They saw all those transactions with all those banks, and it made it easier, you know. And I'm not saying you have to be like me, just do some of it. And some of it means, like right now, I would get on the phone, man, I'd make that like #1 priority today. I'm serious. You know, I mean, look at Michael and Benetta. They're so far the two I know of. I know Brianna's called some people, but I know it takes discipline, it takes time, but those are the, you know, discipline, have a little patience, a little bit of faith, and just rolling up her sleeves. Benetta never questioned a thing. I promise you, she just took and ran with it. I mean, is Benetta, you still on? She may have left.
No, I'm here. I'm here listening. And I felt behind. I just took my picture off. I mean, I went from the stagnant to I have a video thing now. Yep.
But I didn't have to twist your arm in. You just took it and ran with it, didn't you?
I felt like I was behind too. I was like, oh my God, I've been here weeks and I haven't been making any calls, but I was, you know, closing out other deals and finding other properties for the folks I brought over. So
yeah,
it's all good.
Yeah. So I would, you know, if you want to have a call with me, boy, guys, set up a call. I'm looking around, Michael Lakeith, PF Jimenez, Tony, let's see, Liz, Maxine. I hope you're doing good, Maxine. So I pray for you every single day. Maxine, you still there? Well, I know she won't mind me telling you guys.
Thank you.
There you
I'm
are.
here.
If you guys could keep Maxine in your prayers, she's had some trouble with her eyes and needed treatment. So makes life kind of difficult when you get that. Kind of, so
not giving up though.
That's the spirit. So I've known Maxine since 2016. So and never lost that spirit. So and Jim and Olga, please set up a call because we gotta get some stuff going for you. Preferably in South Carolina because it's a lot easier than Virginia right now. So if you could do that, that'd be great.
Okay.
Yeah.
Oh yeah.
So yeah, and anybody else too, definitely set up your calls. Okay. My mouth's pretty dry, but you know what's funny? The last 40 minutes we've been talking about the phone calling and stuff, And it's interesting how that's gotten a lot of attention. But I would challenge you to tomorrow's Tuesday, get that file, get it to Ansac Khalil, get your numbers back. Apparently, the more you say my name, the cheaper it gets. So keep you. I guess that's one good thing about being on the team. Saves money. So, but get on the phone and then bring to the table how your conversations are going, so we can basically dissect them, do role playing, and practice some objection handling. So, and Gene and I got a pretty big announcement on Wednesday night. So make sure you're going to be on the Wednesday monthly team mastermind. I don't want to spoil the surprise, but we're starting mastermind groups. Okay, we're breaking you up into mastermind groups, and part of it's going to be, when you're working with these clients, bring yourself to the table and let's address the challenges and solve the problems together with your peers. Nothing better than that. Role playing. I mean, just the stuff you pick up from those small group sessions that's why I go to events. I always pick up something every single time. So, yeah.
Are you going to send out a notice on that?
Yeah,
Or when-
if you go to the GIA workplace page,
okay.
And here I'll go there. Let me do a share screen. It's a little bit confusing because events is not directly or readily noticeable. But if you go to the GIA workplace page and click on more, and then events.
Okay.
Oops, where did events go? Is it thinking about it? Nope, let me do that again. More, oh, here it is, events. So that's tonight's class. There's Wednesday night's team mastermind. And also, guys, remember, every Tuesday after our Monday night live class, and the monthly GIA Team masterminds is the second Wednesday. So the second Thursday, Beverly sends out the recording of that with the link to register. And now the link, you just register once and you get in all the classes for the rest of the year and all the masterminds for the rest of the year. Yeah.
Hey, Gary, click on Liz right there.
On Liz?
Yeah, click on Liz.
Oh.
Yeah. Joanna, I guess. I don't.
Yeah, I wonder why they're,
Yeah.
I don't know, Ricky. Whoops, what happened? Oh, you're welcome.
No, you're welcome.
I'm like there.
Ricky, Tamara Grimes. Oh, guys, yeah.
There we go.
If you're going to invite somebody to join our GIA workplace page, remember, this is just for GIA members. However, I've noticed, I think 3 people are on here that are not on our team, but they've been invited by team members. If you could let me know when you do that, because chances are you're probably trying to attract them to the team, and which is perfectly fine. Obviously, we want to help you do that, but let me know so we can talk to them. I emailed 2 of the 3, I think, and never heard back from them. So I don't know. Sometimes people are just trying to get in and get free stuff. I mean, I'm always willing to share, but you know what? Chances are they'll be a lot better off being on the team if they want to learn how to do this stuff. Yeah. Okay, let's check the chat. I haven't checked really the chat box almost all night. So if you made comments at any, oh, here's one. Can I set up a call with you and my client to discuss trust first tenure on exchange? Yeah, Benetta, definitely do that. Let's see, Mark. The Garn St. Germain Act 832, which imposes certain limits on the application of due on sale closes. Yep, that's thank you, Cindy. Due on sale means contract provision which authorizes lender and its option to declare due payable. That's correct. Yep. Tech is not my forte tonight. Okay. Gina, look.
Hey, Gary,
Yes.
I don't think I'm in the team. I don't think I'm listed in that.
You're not on the GIA workplace page?
Yeah,
Okay, hang on one second.
can't seem to find it myself.
You know what? Check the stuff you got from Jody PF. We'll have the instructions in there. And if you don't see it, just email her or call her in the morning. But let me see if I can find you here. Add people by name. Let's see if it'll find you here. There you are. Okay, consider it done.
All right, thank you.
You're
Yeah,
welcome.
it's been a slow process getting on board. Things have been a little mismatched, and so it's taken a while. But that's why I haven't actually scheduled a one-to-one with you yet,
Okay.
because I'm not fully on board yet.
Well, listen,
As far as getting all the accounts lined up.
Can you put your link in the thing there for your calendar?
yes, let me go grab that real quick.
I
Ooh,
can't
good
seem to
idea.
find it.
Let's see. Strategy. Should be opening up a Word doc. Oh, here it goes. Sorry. Set up strategy call. Okay, let's grab that. And everyone, okay, there you go. So if you guys go ahead and grab that, copy it or cut it, and then you can paste it into a Word doc. That's what I do, or however you want to save it. That's how you set up a call with me.
You're
I know.
bookmarked on my computer. You're right across the top. Click, click.
There you go. Yep. Hey, I should tell you this, guys. I forgot to mention this earlier. So next week I'll be in Maine. I'm going up there to hopefully reel in a couple of big whales I've been working with for several months. Big performers, a couple of big teams, and they're very interested and like what we're doing. And they're like this close. So I'm going up there and I'm going to stay at a cottage on an island that's owned by one of the people. So if we become good friends, she's invited me up there. So I'm not leaving until she signs on a dotted line because I'm gonna be on her island. So she got to sign or I ain't leaving. So no, just kidding. That's actually, I won't do that. I'm not gonna leave till she signs. And the other guy is a commercial guy with 4 people. So that's what I'm doing next week. I will be available hit or miss throughout the week. Other than Thursday, we'll be on the island. But the rest of this week should be pretty wide open. And if you want to, Saturday, I've got a long drive up, and the following Friday, I'm driving back. So I open those times up a lot more on that Friday. Saturday's just open. So if you want to call me on Saturday or set up a call, I'd be glad to do that too, Okay.
Thanks, Gary.
Okay. You guys have a wonderful evening. Thanks for participating, and thank you for doing all you're doing to help make our team great. When we add up closed and pending under contracts, we're at 226. Phenomenal. It's just like going like this, So so be part of it. Jump in, make those phone calls, and we're getting a lot of recognition around the organization. So, and it's because of you putting the numbers on the board,
Ya, yo manejo.
Yeah.
Pongo mi driver license, se acabó mi clase.
Okay, guys.
Thank you.
Time for ice cream or yogurt or something sweet, and I'll see you Wednesday.
Good night.
Thanks, Gary.
Thank you, Gary.
Thank you.
Bye-bye.